Good morning, everybody. If you've been a regular viewer of the show, you'll know the format here that we always just sort of run through the week's news in the sector first, and then we normally interview a fund manager. This week, slightly differently, we're going to have a panel of three to talk about a topic that I think is quite important at the moment, which is whether markets have changed direction. But before we get there, let's just run through the week's news. There's a little bit of that to do. I've brought up the slide here so you can see the four funds we're going to talk about. Let's kick off with Aberdeen Property Income. Now, this is in the news because it's been the subject of bid talks. So it's got bids from Urban Logistics and Custodian Property REIT. And you can see that despite that, it's still trading quite a big discount to net asset value. It's a decent size, around about 200 million, but that's quite small in the property world. On the 20th of March, Urban Logistics said it would not proceed with its offer for Aberdeen Property Income. So that meant that the Custodian REIT offer was now the only one on the table. And the share price of Custodian REIT dived. That matters because the offer, basically, there's no cash option in this. Basically, all you get is Custodian REIT shares, 0.78 Custodian REIT shares for every Aberdeen Property Income share. Now, in terms of the net asset value, what that means is where you had an NAV of 83.8p for your API share, you're now going to have 0.78 of 94.6, which is 73.8p. So you've seen quite a big drop in your NAV because of this. And this is because the whole thing is set up because of doing a transfer value from API shareholders to CRI shareholders as a way of getting the Custodian REIT shareholders to say, yes, we want to do this. And they have voted already, and they've already said, yes, we want to do this. Not that surprisingly. If it all goes through, even on the current low Custodian REIT share price, you would get a little uplift in value. You can see there 52p, 54.8p, so about 5% uplift. But if you reject it, then the board says it's going to propose a managed wind down. Now, on the 20th of March, the fund said it sold two properties for £16.5 million, which is a very small discount to NAV. The board quite pointedly has come out and said that's not what you get if we did a managed wind down. They are really pushing the Custodian REIT option, and I'm not sure why. If you could sell the portfolio at NAV, and I'm not saying you could, but if you could do, you'd get more than 50% upside as an API shareholder. If you sold it at 20% discount to NAV, which, you know, that's quite a big haircut, you'd still get a 23% uplift. So I think on the way that the numbers have all moved at the moment, it's a slam dunk. You should just say no to the Custodian REIT offer and opt for a managed wind down instead. As I said, that's not what the board's saying. I don't know why that is, but it seems daft to me to destroy value by going through with this deal. Now, Hipgnosis. We talk about this every week, it feels like, and I didn't really want to do this again, but here we are on a massive discount because a lot of things have gone wrong. And then on the 18th of March, it came out and said the NAV that they've been published has been double counting the accrued income, which is a massive, massive failing. That meant that they've had to take $110 million off the net asset value. So that's a 7p drop in the NAV per share. Turned out the board had questioned whether things were being calculated before, but had never said anything to shareholders about this. And the investment advisor says it now agrees that the board was right, although it might have said something different before. And the board's pointed out that that means that because the market cap's heavily influenced by the what the NAV is, it's almost certainly been overcharged fees by the investment advisor. And the big thing, obviously, is that we've all been buying and selling shares in this thing based on the wrong NAV, which is, you know, terrible. So, I mean, the auditors have a massive question to answer here, I think. You know, how could you audit this more than 1 year and not spot this? It does come back down to who's ultimately responsible for this. I mean, clearly the board is responsible for publishing the NAV, and at the end of the day, it and the audit committee of the directors should have picked this up before and really pushed to get a proper answer on this. I think we now got a situation where we've got another fund where we could see a lawsuit against the company. I'm a shareholder in this, and I'm thinking I might sign up to it. So there we go. Scottish Mortgage, a bit of announcement this morning, which caused some excitement. That was last night's close. The discount was 7.9%. It's about sort of 12 billion market cap company. As we know, it's one of the biggest funds in the sector. We talked about it last week because they're going to buy back at least £1 billion worth of stock, which sounds like a huge number, but it isn't even 10% of the share capital. And I did question whether that would be enough to sort the discount out, but actually, the discount moved quite aggressively almost straight away. If you go back to the thing, you see that little spike up there. It did narrow quite aggressively. I also question whether, if the market fell, would it be forced to suspend its buyback, because there's lots of things that are going on with the gearing and the proportion that it's got in unlisted stocks and things. If you want to know the ins and outs of that, go back and watch last week's. This morning, it turns out that this activist investor called Elliott now owns 5% or over 5% of Scottish Mortgage. It doesn't really own it. It's got less than 0.5% that it owns directly, and the rest is held through contracts with various brokers or banks. Nevertheless, that gives it sort of the rights to buy this stock, which is about a sort of £600 million investment if they actually put the money down and convert it into a direct holding. I'm guessing that, although they saying they went through this thing on the 19th, they actually tell the market until the 21st, they're already sitting on a decent profit. The share price is up another 1% this morning. So the question now we have is, why did the board announce the £1 billion buyback? Was it because it knew that Elliott was there building the stake? What's Elliott up to? We have no idea. Could they be trying to force something through on a kind of governance basis? Remember, there was a row last year about whether the board knew what it was doing, investing in private equity. And you know, has the company got too overexcited in buying private stocks? I think that'd be a slightly strange thing for it to do, because it's sort of like one of these fights that might not make him an awful lot of money just to getting that sort of thing sorted out. The normal approach to this thing, which you're an activist investor, if you sort of hedge out the underlying, so you don't have to put up too much money up front. So you basically buy the shares and sell the underlying portfolio. You can't do that with a lot of the Scottish Mortgage portfolio because it's unlisted, so it's not really hedgeable. So they are sort of exposed to what happens with those holdings, and the question must be, is this just a bet on recovering these growth stock valuations, which is really what we're about to talk about in a minute? Or it might just be that they've sort of playing this for ages. When it was on a 15 discount, they've gone through the number, they've announced it, and now they're already selling the shares. We won't find out until later. One last one. We've never had this situation before where we've had a bit of news on somebody who's on the panel, but we do. So we had results from Witan this week. There's the numbers there. Dividend went up again, all good. And the big news, and maybe James will allude to it when we're talking later, is that the CEO is going to step down. And that means the board have launched a review of its management arrangements. So that's very sort of early days in that story. So there we go.